For the first time in over a month, Tesla's daily chart has closed with a green BX and price is over $420. This was our initial requirement to start peeling away our conservative bullish outlook on Tesla and start to have more of an aggressive approach towards Tesla. If we overlay the weekly BX, you are going to see that we have been aggressively bullish on Tesla basically since the beginning of November all the way out until the beginning of January. This is because price was continuing to make higher highs and the BX trender was continuing to hold bright green. This means that institutional buyers, the people who can actually move the market, the people I care about, are still in the market and they will continue to drive prices higher. In yesterday's video, we talked about how this BX trender was actually showing red. And so it's a very good sign today that with cooling CPI and price actually pushing over $220, that we could flip this thing back to green. Now, if you remember over the past couple of weeks, we've been talking about this smart money zone down around 340 in the institutional buy area from 350 to 370. As you know, most of the time, this is going to be where price will pull its way back before we bounce. Now, of course, this doesn't always have to occur. We did see this happen back here in August. Price pulled right back into that area before breaking out. It happened again in October, but then the rally before earnings and then the election never pulled back that drastically. When I look at a chart like this, I say to myself that I am still obviously bullish on Tesla as I have been, but I yet put my aggressive bullish hat back on. And that's not because I'm planning to short or that I think that that's a good idea, like not at all. And that's because I still think there's a 50% chance that this is a trap. From a technical standpoint, I think it's a trap because we've yet to fully break structure. And technically, we're still making lower highs. But I will say from a fundamental standpoint, CPI was kind of the elephant in the room. The inauguration is on Monday, and the only other thing that we really have standing in our way is earnings. We just saw banks do very well, and obviously they're going to do well when we have a hawkish Fed, and especially if we're going to continue to have a hawkish Fed in 2025. But big tech is going to be what's next. And so what's most important for Tesla is to get this weekly BX back up to showing higher highs. You can see that we've had times like this before where we're making higher highs on the BX, it pulls back into lower highs, only to flip back into higher highs. And I saw Trader Blake on X today post, it's always easier to buy back in than to get out of a bag held position. And I couldn't agree more with that. That's why I would rather continue to have a conservative bullish outlook on Tesla and just sell cash secured puts here and there, because once we get the full green light, I can just become aggressive and buy back into my calls once again. I'd rather lose out on a little bit of profit now to make sure that when we're actually buying, there's a higher chance of that breakout to occur. But I will be honest, as of this point, this is looking very good. CPI numbers came out this morning and the market was very happy as they came in line with expectations. The S&P 500 actually pushed up nearly 1.82%, which is very strong. But you'll see the BX trender at the bottom of your screen is still red, which means that overall sellers are still in control of the market. There's a very good chance that we are nearing a bottom and that buyers will start to step in, watching this start to move its way back up. But until we begin to see higher lows, I am not aggressively bullish at this point. We take a horizontal draw tool on the daily chart and attach it to most recent highs. You will see that there have been multiple times in which the S&P 500 finds a bottom, breaks out aggressively, only to sell off into a lower low once again. We see the same thing happen here January, and then again within the past couple of days. What's different this time is that we're finally starting to find a bottom. And what we want to see is the BX begin to make higher lows like it did back in August, because that will give us an indication that the subsequent breakout to the upside is going to happen. And then price can continue to expand. And so as we come up on the inauguration Monday, it looks like the market wants to continue to run into the rest of Q1, which is what we've been expecting. And that will eventually flip the BX to light red. And that is when we'll remove our conservative bullish outlook and then instead apply an aggressive bullish outlook. The main difference is that right now I'm staying away from call options, focusing more on selling cash secured puts, and waiting for the confirmation. Once we get higher lows on that weekly BX, then we can focus on trading directional call options, and we can see the S&P 500 move its way back up above $620. Strong day for NVIDIA, up about 3%. And while we still remain conservatively bullish on this, focusing on selling cash secured puts, we have yet to put an aggressive bullish rating on this once again. You'll notice that obviously price is still in a very strong uptrend. But if we look at the daily chart with the weekly BX overlaid, you will see that we've been losing steam since about November 11th. When the BX goes from making lower highs, when the BX begins to make lower highs and then eventual lower lows, this is an indication that buying pressure is leaving the stock, and we do not want to be trading during these times. And in most cases, if we are in a bullish trend, I like to sell cash secured puts here because I'm not expecting price to sell off drastically, but I don't think buyers are going to step in to bid the market higher. Over the past couple of weeks, you've also noticed on the daily chart that price is making lower highs short term as well as lower lows. We got trapped in the beginning of the month when the BX started to make higher lows and looked like we were going to break out. Price ended up rejecting, pulling back, and one good sign is that price is now making higher lows, and it has yet to sell off into that 120 worst case scenario target. My personal outlook is to continue to sell cash secured puts on this because we're conservatively bullish. And then once the BX flips back to light red, I will resume a bullish aggressive stance and start to play directional options and shares. From there, we should see price break over 140, and I will be setting targets around $165 to $170. I hope my sacrifice was worth it, guys. As soon as we closed out AMD calls last week, it seems that we have found a bottom. And, I say that sarcastically, but luckily I did still hold on to my long shares. I just removed the calls because of the short-term risk. But if you look at the bottom of your screen, you will notice that the weekly BX has turned light red, which is our first sign of a bottom. Now, this has yet to confirm. This is why Friday's candle closure is so important. But as of right now, it looks like AMD is at least going to continue to move its way up back to $122 to $125. We are still within this downtrend. Price is still making lower highs and lower lows. And last time we saw the BX flip to light red was when we tried to time this long around 120 and then ended up eating a loss. The main thing that we have to watch here is for price to attempt a break of structure once again. If we take that Fibonacci from highs to low, you're going to see that our smart money zone is going to be right between $125 to $130. And if we want this to start to trend back up and hit that 155 to 160 target that we've been talking about for the past couple of months, then we must take out $130. This would trigger a break of structure. Price would most likely pull back to test a higher low, find support, and then start to move its way back up. At this point, my stance is the same on AMD. I am still bullish for 2025, but I don't think it's smart, in my personal opinion, to be aggressively bullish. This is why I removed my calls, and if we close with a light red BX, higher low on the weekly this Friday, then we can resume our aggressive bullish rating, and I will go back to looking at call options for June and July. In the interim, I will continue to focus on selling cash secured puts and waiting for the bottom to be confirmed. MSTR is up about 5.5% today. And in yesterday's video, we talked about this $360 resistance level. You will see that we are currently pushed up around here, but the BX trender at the bottom of your screen is still showing lower lows and is dark red. In order for this compression to stop, and for that subsequent breakout back to $500, which is what everyone is waiting for, we need to see buying pressure start to make higher lows and then make higher highs. A great example is going to be looking back September 9th, 2024, when the BX trender stopped making lower lows and began to make higher lows, flipping to light red and then eventually green. This was an indication that a bull run was going to happen for a sustained amount of time. And while I am conservatively bullish on this, personally, I'm not going to be focusing on calls. I'm not even going to be trading shares. I think one of the best things to do for MSTR at this point is to remain patient and sell cash secured puts. One of the great things about selling cash secured puts is that you want to do it on stocks that you want to own for the long term, have high implied volatility, and are trading at a discounted zone, which, in my opinion, MSTR meets all three of those requirements. Once the BX confirms higher lows and flips to light red, then we can put on an aggressive bullish stance and begin to play shares and directional calls. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description.